traders right around the world. It's James here on behalf of Pivot Point Trading, bringing you hopefully a shortened Thursday afternoon market recap. I understand yesterday, as at the close on Wednesday, I did provide a market update and some individual trade recaps. It did go for about 16 minutes or so. My apologies, but I just wanted to go into as much detail as I possibly could, given what the markets had done on the Monday, Tuesday, and Wednesday. Obviously today, taking off from where we left off yesterday, you can see the continuation to the downside. We referenced the shooting star type of candle on the Dow Jones Industrial Average yesterday. I also spoke about that on the S&P 500, that really nice shooting star right at that resistance level. Today, if I change back to the Dow Jones, we closed down just over 170 points on the daily. At the moment, we are at no man's land. We are still in between support and resistance. Yes, it was quite a bearish day. That was our outlook for the week ahead as per that pro analysis discussion. It took a little bit of time. We had a little bit of a false movement on the Tuesday and the Wednesday, but today I really feel as though the market's starting to vote in agreement, at least short term, to the downside. However, having said this and going into the market as neutrally as possible, you just need to go back and reference times in the past where we've had quite dramatic down days followed by at least, the equivalent upside, or at least an inside day candle. You can go back and have a look at these long dark day candles followed by the incredible bullish, the types of candlesticks which have followed in recent history. Generally speaking, this doesn't occur, but because we are range bound and we are effectively going nowhere, we are completely sideways on these markets. I'm really open to whatever can happen on Friday's trading session, in all honesty. I don't want to sit here and say, look, these markets are incredibly bearish at this particular moment in time, because I don't want to look like a fool. I mean, tomorrow, if the market just gaps up and we're up another 170 points, it's just going to negate the bearish movement which has taken place today. But on indication, based off where we have closed and the candlestick that we have received as at the close on Thursday, it doesn't look too good for the equity markets moving into Friday's trading session. You can see on the NASDAQ, yesterday I put out that video and I spoke about of the most bullish, or the most bullish argument I can make on all three of the markets was the NASDAQ. It wasn't too bullish, but it held up relatively well speaking. We're still at this resistance level, but today we were down 40 points on the NASDAQ. We have some form of an evening star reversal. It isn't textbook, but a really nice type of reversal indicator, or at least a candlestick pattern which is presenting itself on the NASDAQ. Moving into some of the individual trade analysis, Apple is starting to make the turn to the downside, which we've spoken about. I'm going to keep a very close eye on the Apple trade setup. Amazon at the moment is still really nicely set up in that Bollinger Band squeeze. The volatility in Amazon itself is still very suppressed. It hasn't broken out, so I'm very neutral in that particular trade. Boeing Airlines has continued its downside move. Yes, we did stumble about that 140 area, going back to this most recent support level, but this is really indicating a continuation, and you can see that my overall target, or my ultimate target on this stock, is down here at $136.50. This is the beauty of being a swing trader. You have to sit through these types of movements because the overall movement itself is the wave and the cycle, and that is to the downside, but you do set up these types of bear flags in the event of the bearish cycle. The same is true for Caterpillar. Have a look at Caterpillar. We were speaking about potentially a bear flag. Today, we didn't see all too much of a bearish candlestick. Yes, this is an incredibly bearish candlestick, I should say, but the overall structure of it, you can see it really happened on the gap down. We tried to push back up, we failed, we have a long upper wick again. This is what we call the gravestone doji, very bearish candlestick. It isn't occurring at resistance, so to speak. It is at a short-term or temporary support, but I'm still looking to see Caterpillar push below these two levels, one at 86.36, which we initially initiated positions at. How about that? Initially initiated positions. But this is really the continuation trigger for this week at $84.90. We're here at $85.47, so we are only down about 50 cents on this Caterpillar trade at the moment, but there's some really good expectations that Caterpillar is going to continue in the bearish movement. I love this Caterpillar trade setup. I cannot make it clear enough. It just takes time, and that's all. You just need to leave it alone, let it run its course, but the overall cycle itself should resolve itself down to $83 to begin with, and then ultimately, if we get really lucky on this trade, down to $78.71. CVX today hit our target 101.18. It's been a long time coming. We initiated positions at 105.41. We had additional re-entries at 104.56 or 104.58. Today we hit our target. We did have a theoretical stop here at 103.71. I'm not sure if people got out at this level, but I know a lot of people did hold and they hit their targets today. They're very happy. I've got a lot of emails saying thanks for the trade setup. It was good analysis. And as such, it was a very profitable trade. So congratulations to you. Facebook today, you can see it's sort of just really hesitantly trying to move above that 82.52 trade entry. I've spoken about this as resistance level over and over again, right at the neckline of this potential double top. It's presenting itself right at the right location. And you can see that the oscillators have moved back into overbought territory. This is going to take some time to shake out. A lot of people get really excited about these one-off long day bullish candlesticks, which have really taken place on the Wednesday, but you really need to take it or look at the bigger picture of where Facebook sits in the face of the market itself. We came into the week once again with the outlook of it possibly or very likely moving bearish based on the overbought nature of that resistance level and how that funnels through to our individual stocks. So please pay attention to Facebook. If you are in this trade, I would suggest you put a stop just below either today's candle or put it below Wednesday's candle. You shouldn't be in it. I think I made it, or I did make it very clear on the Facebook trade. Let's move into Google. Google at the moment is continuing to move sideways. The longer it stagnates at this area, the better setup we have to break support and to oscillate back down. So right now I'm looking at Google still very neutrally. We are getting some nice price action. Volatility is suppressed once again, very similar to that of Amazon. You can see the Bollinger Bands really constricting price. This is going to be a really great trade setup. I don't think it's ready yet. That's the problem. I will give you an up-to-date discussion over the weekend on how to play Google, but right now, don't feel as though you're missing out on any possible trade opportunity moving into Friday. In regards to a swing trade on Google, it will be ready by the weekend, and I'm happy to bring you up-to-date analysis on that Google trade. Moving into GoPro, GoPro is continuing. It's sort of pulling into and maybe potentially making a bull flag. I'm not sure if people are in this, but if you are, it is very, very profitable. We had our stop here at 54.84. You can move this up, and I'd say right now, move it up. Just be done with the trade. It's a nice looking trade, a big volatility breakout or a nice volatile move to the upside. But this type of candlestick right here suggests a slowdown or even a continued pullback. And if you have a look at Baba, this is somewhat of a similar chart. Baba recently has broken out, but then it's pulled right back down to the initial breakout entry. And I don't want people to hold any potential GoPro trades long term where they see a profitable trade turn into a break even. So right now, if I was you and based on the analysis, I'd put my stop right here at $57.70. Just be happy for the $2 move which GoPro has given you over the past 6 or so trading sessions. Goldman Sachs is continuing to hold the upper levels. 205.17 was the trade setup. Not in it personally, but it is holding up relatively well given that the market did have quite a dramatic downside day today. IBM floating right around that downside break down at 188.22, 168.22. A really nice looking bearish setup. Very bearish candlestick on the Thursday. A really nice trade setup, at least down to about 165.08. I will keep a very close eye on IBM as the trade progresses as well. Netflix at the moment, I mean, look at this. I mean, it's just completely, again, plateaued sideways. Really nice type of trade setup. Very neutral on this. The longer it moves sideways, the more I can get behind a bullish trade now that we've really been in that oversold territory and we're sort of beginning to stabilize at least and we're building that upper structure. Structure is so important when you're a swing trader. And right now, Google's really starting to give it, or at least present it really nicely to us. So the longer this continues to move sideways, I will give you updates on these trades and they may even become solid lines moving into next week. And to conclude with, as at Thursday, we've got Tesla. Tesla today has stopped us out. 100%. You should be out of this trade for a profit on Tesla. Given Tesla's struggle to move higher in the face of a really weak market at this particular moment in time, you have to count your blessings on this trade and say, look, it worked out really well, but I don't want to hold this any longer than what I have to, because the signs at the moment, rounding back to the Dow Jones, the S&P and the NASDAQ, when you're in the face of this candlestick in a range-bound market and the oscillators are really suggesting that price is going to move to the downside, you don't want to be stuck with long-term positions, or at least short-term swing trades, to the upside in the face of such a bearish market. Again, going back to the discussion quickly at the start of this video, the amount of times that the market has been on the verge of a breakdown, just say for instance over here on April 17th, and then you get that one big white candlestick just to follow it and really negate any bearish move. I'm still open to that. Again, you've got the same type of setup here, a really big bearish Moroboshi type of candlestick, but the next day quickly negated again over and over. This particular candlestick right here, negated. Even going back to Tuesday last week, you get the big downside candle. Although it was temporary, you get that inside day bullish pop. I am open to that occurring to finish the week off on the Friday. Again, a lot of discussion going on, a lot of movement, a lot of people waiting to see the outcome of the Greek debacle at the moment. Friday is the final day to sort out their finances. I'm keeping a very close eye on that, and I do think it is going to be a market mover, at least very short term. I don't think it's going to play too much of significance on the global economy, so to speak. If they do default, I do not see them defaulting. They've been sort of kicking the can over and over and over again. This has been going on for years, and I can't really look into that debacle any much further than what it's warranted at this particular moment in time. The news will run its course. We'll see how the markets react to it. But right now we've got a lot of good trades open. Some we're just waiting on, again, that Caterpillar trade. It's just running its course, like CVX is done and it's hit our target. You go through these natural slowdowns, sometimes these little movements against you before the overall cycle finishes and runs its course. That's the position. That's how we're set up at this moment in time as at the close on the Thursday. So I think you'd agree we came into the market this week quite bearish, and you can see now this is looking like it's getting a little bit more momentum. If I change to the weekly candlestick as at yesterday, it was up about 60 points, just over 60 points, net movement of 20 points a day. But as at the close on Thursday, here's the net weekly type of candle. It is down 105, and you've got that up wick on the weekly candlestick as well, suggesting that we are going to see the continued cycle, at least back down to the short-term support. And then, of course, we'll analyze the market and we'll see the candlesticks and the chart patterns, which are presenting themselves at this location to give us some really good trade setups and at least an overall outlook on the market moving forward into or further into June 2015. So I'll leave it at that on this Thursday afternoon market recap. Have a great evening. I've got a backlog of emails I need to get through right now. That's fine. So stand by and your questions and concerns will be answered from me over the next 30 minutes or so. So have a great evening, everyone. I look forward to working with you over the weekend in that analysis class. And as I said, I'm going to get through this little backlog of emails, which I have in my inbox as at this recording. All the best, friends and traders right around the world. It's James signing off on behalf of Pivot Point Trading. Goodbye.